Welcome to the Gamma Brief. It is Wednesday, July 29th, 6:45 a.m. Eastern. The Gamma Brief is an experiment. The brief is built using a layered generative AI pipeline to capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. The brief is built on a single dataset, the SPX 0DTE options chain. All the gamma levels, dealer positioning data, put and call walls, and the GEX flip point are calculated from that chain only. A friendly reminder, Gamma Brief is market intelligence, not financial advice. If you like what you hear, smash that like button and subscribe. Every subscriber to the channel helps. All right, let's get started. ES futures are trading at 7,485. Yesterday, we issued a caution signal for high volatility based on the negative gamma setup, but narrow sector rotation left the session range bound instead. Today, if ES holds this morning's overnight gap through the open, then dealer resistance at the call wall will structurally fail. The structural backdrop remains in a negative gamma regime, carrying a net GEX magnitude of negative $2.2 billion. There is no flip within the observable chain. VIX is at 18.22, maintaining the elevated volatility profile consistent with our high volatility day type forecast. No high impact events are scheduled before the open, so this pre-market regime read carries into the cash session without a caveat. Moving to the critical pivots, the put wall sits at 7,300 and the call wall is at 7,450. The expected move band is plus or minus 85 points, placing the upper bound at 7,514 and the lower bound at 7,343. ES sits 185 above the put wall, minus 35 from the call wall. A gap fade reprices the floor to 129. Notably, ES futures have already breached the 7,450 call wall and cleared R1 at 7,468. The first active resistance is now R2 at 7,523. Overnight action was dominated by positioning ahead of today's Federal Reserve decision. ES futures climbed 0.27% and the 10-year yield dropping 4 basis points. Sector breadth is highly rotational, with financial services and communication services leading, while energy and utilities lag despite crude oil rebound tied to US-Iran tensions. The risk radar is dominated by the Fed. The Fed interest rate decision and FOMC economic projections drop at 2 p.m. Eastern, followed by the press conference at 2:30 Eastern. A dovish tilt fuels procyclical buying above the call wall, while a hawkish surprise forces dealers selling into an already negative gamma tape, accelerating a downside flush. The environment is consistent with defined risk directional momentum setups post-Fed. Selling premium here is picking up pennies in front of a steamroller. A sustained rejection below the 7,450 call wall post-Fed invalidates the breakout thesis. The primary plan triggers if price holds above 7,450 after the 2 p.m. decision, targeting R2 at 7,523. The alternative plan triggers on a break below S1 at 7,370 after the 2:30 Eastern press conference. Avoid early entries given the calendar risk. The bottom line is that dealer positioning heavily amplifies directional moves today, but the catalyst remains entirely dependent on the FOMC resolution this afternoon. Wait for the initial reaction to settle before committing capital. Yesterday's read didn't hold. Respect the levels, not the narrative. Levels set, buys defined. Good luck out there. Standard disclaimer remains. Gamma Brief and GEX log are market intelligence, not financial advice. Options are high risk, trading is high risk. Manage your size and trade your own plan.